Hey everybody, my name is Adam Gill. I'm an independent agent, and today I want to give you some information on your health insurance options. I talk to people on a daily basis, and a lot of them are confused about what's out there and are being misled in different directions. So today I want to give you an idea of exactly what's available to you, so when you're shopping around, you know exactly what to look for. Okay, so first things first, the first thing you really want to look at and explore is going to be the Affordable Care Act. A lot of people refer to it as Obamacare. That's kind of the main health insurance these days for regular health insurance. So people that would really want to focus on the Affordable Care Act are people that may, if you have any kind of pre-existing conditions, any kind of major medical conditions you're getting treated on a regular basis, the Affordable Care Act is probably going to be a way you want to go. A lot of the other plans won't even cover you for anything pre-existing if there's something there. So make sure whoever you're talking to or whatever your plan you're looking at, make sure they tell you if a pre-existing condition is covered, because the Affordable Care Act will cover that condition for you. Okay. Secondly, if you have a lower income, the Affordable Care Act can be a great option for you. And the reason why is it'll give you what's called a subsidy. A subsidy can help make those plans much more affordable. It can lower the copays, it can lower the deductibles. So it can make these plans extremely competitive and again, very, very affordable for you. Now, when I say low income, don't think just because you may have a little bit of a higher income in your mind, you still want to explore this option, because let's say you're married or if you have children, well, if there's more people in the household on the same income, it can still give you a subsidy. So we at least want to explore this option no matter what, just to make sure we're not missing anything. Okay, so that's kind of the people that would really fit into the Affordable Care Act. Your other options you have away from the Affordable Care Act, and yes, you do have some options, a couple of them, and that's what I'm going to cover now. So one of the main plans that we're seeing other agents write, and they're not explaining these plans properly, they're not giving you the customer the right details on these plans, are limited benefit plans. Just like it sounds, these plans are limited. And what I mean by that, everything you do has a cap on it. And what I mean by that, let's say you were in the hospital and you were there for 5 days. Well, the way that it works is this plan is only going to give you a certain amount of money for every day you're there. So let's say it gave you $1,000 a day each day you're there, and it costs $4,000 a day to be in the hospital. And it could be a lot more than that if you're in intensive care or had a procedure done. But let's just say it was $4,000 a day. Well, they're giving you $1,000. That means you're paying $3,000 every day you're in the hospital. Okay, and that's how it works on every procedure. On a surgery, they give you a certain amount of money. They may give you $3,000. If the surgery is $10,000, you're paying that other $7,000 out of your pocket. Okay, so be very careful when someone is talking to you about this plan has no deductible, has an extremely high application fee, national PPO plan. Make sure you're asking them, how much is it going to cost me if I'm in the hospital? What's the most I could ever have to pay? Those are things you want to make sure you're hearing from whoever agent you're talking to, and make sure they're giving you all the details in these plans. These plans, I write these on an extremely rare situation. Okay, I stay away from these plans the best that I possibly can. Your second option that you have is going to be a Christian share plan. Now, the Christian share plans have become more popular these days for people that the Affordable Care Act plans are just unaffordable. The Christian share plans have become more popular these days. Personally, I would not write the plan for you if you wanted it, and the reason why, I've had customers and clients of my own have had this plan where we've written it for them, and they've had bills not paid, and I'm talking $100,000 bills that they decline for one reason or the other. So I've had some bad experiences with that. If somebody wanted it, I would guide you in the direction of how to get that plan, but I most likely would not write it for you, just because I've had a really bad experience with that, and I don't want to put anybody in that situation. Secondly, or the other option you're going to have is going to be a short-term plan. This one right here is the number one plan that I write away from the Affordable Care Act. Okay, so people that are going to really qualify for this short-term plan, or when I say qualify, are people that are really going to want to look at it, are people that may be self-employed. Maybe you don't have benefits offered through your employer or your job. Maybe a good option for you. Self-employed is one of our biggest biggest customers for this plan, just for the simple fact, if it's a small business, you may not have group benefits there, and the short-term plan can work out really, really well if the Affordable Care Act's not in budget for you. Secondly, people that have a higher income. If you have a higher income, I'm going to give an example in just a minute here. The Affordable Care Act plans can be really expensive when you have a higher income. You're getting no subsidy at all. Those plans can be very, very expensive. In the short term, can save you a lot of money. Again, I'll show you that in a second. Other people, if you're healthy, again, if you have any kind of pre-existing condition, the last thing I want to do is put you on a plan that may not cover that. So make sure whoever you're talking to, let them know if you have any kind of medical issues, because if you do, I want to make sure you're covered correctly, and they should too. So I don't want to put you on a plan that's you go to the hospital for a certain situation you've always had and it's not covered. It's the last thing I want to do. So you want to be relatively healthy. If you're going to be on a short-term plan, you may go to the doctor a couple times a year, things like that. But those are things we can discuss on a one-on-one basis as well. And then lastly, if you have an expensive employer plan, the employer plans can be pretty good if you have just kind of one person on them. But these days, as soon as you start adding a child or a spouse or a whole family on those plans, those can also be very, very expensive. And that's when a short-term plan may save you money over that as well. Okay? So those are people that would really fit the situation for a short-term plan. All right? So what I'm going to do now is I'm going to show you an example of the Affordable Care Act compared to one of these short-term plans. Now, this is a situation for a 42-year-old male, a 40-year-old female, and 2 children. So husband, wife, 2 children on the plan. There's no subsidy involved here, so the income is at a point where they're not getting a subsidy at all. This particular plan has a deductible of $6,650. Okay? The maximum out of pocket is $8,150. Again, I don't care where you go on this board, whatever plan you go with, make sure you have an out-of-pocket maximum. Okay? It's a lot easier to pay $8,150 than it is to pay $100,000. Make sure you have that. Again, the limited benefit plan does not have an out-of-pocket maximum. That's the number one thing you want to make sure you have. Okay? This particular plan, now again, every county is a little bit different on these plans. This particular county, this would be the lowest cost plan that I would recommend for somebody on the Affordable Care Act. Okay? And this particular plan would be $1,270 a month on a monthly basis, would be the monthly payment for this particular plan in this county for a family of 4. Okay? Now, same situation, same family on a short-term plan. Now, when I say short-term, it's going to be a 12-month policy. Some of these situations, we can do a 3-year policy as well. And that's something, again, we look at the individual situation and see if that fits you best. But we would do a 12-month policy. The deductible on this plan is $5,000. Again, lower than what you're going to see on the Affordable Care Act. The out-of-pocket maximum is only $7,000. Again, lower than what you're going to see on the Affordable Care Act. This plan is going to also include dental and vision. And then on top of that, what I try to do when I write these plans, my ultimate goal is to protect you catastrophically. I'm not always worried about the copay to the doctor or what it's going to cost to get blood work. Those things aren't going to break the bank. The things that I'm worried about, what if something bad does happen that could be catastrophic financially? Those are the things I want to make sure you cover from. Okay? So on this particular situation, we have a critical illness policy to where if you ever had a heart attack, stroke, or any kind of internal cancer, you would get a lump sum of $35,000 in your pocket. Okay? We can go higher on that coverage, lower on that coverage. For this example, it's $35,000. That just covers all of your medical bills. It's going to cover anything else you may need for travel expenses, for any kind of medical reasons, things like that. So it gives you a $35,000 cash benefit for any kind of heart attack, stroke, or internal cancer. You also have coverage for the hospital. So if you ever had a hospital stay, this particular plan would give you $3,000 the first day you're inpatient in the hospital. And we'll give you another $500 the next 3 days. So what that means, if you're in the hospital for 3 days, this plan would give you $4,500 check in the mail. Okay? Your deductible is just $5,000, so that almost paid the entire deductible for you without you even coming out of your own pocket to pay it. Okay? So it protects you extremely well in this situation. Now, the price for everything we just went over, you're looking at $676 on a monthly basis. Okay? So it's almost a $600 savings over the Affordable Care Act. All right? So the reason I really want to make this video is I really wanted to give you a good understanding that If the Affordable Care Act does not work for you, you have options. The short-term plan would be my number one recommendation in about 99% of the people that I talk to if the Affordable Care Act does not work. Now, if I'm speaking to you or if I'm going to help you out, again, I'm going to explore everything on this board just to make sure we're not missing anything. And that's one thing I try to tell people. If someone's trying to push you one way and one way only and not telling you what other options are out there and the reason why they don't recommend them, I would maybe back up a little bit and maybe talk to somebody else to get a different opinion, because we're going to look at everything here and just make sure whatever we have, whatever policy we have you and your family on, is going to fit your situation best. Okay, so I hope this helped you guys out to give you kind of a better understanding of what's available to you. If there's something I can do for you, my number is right on the screen here. Feel free to call me. I'd be more than happy to help you. Thanks. Have a great day.